Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope you had a good weekend. Welcome to our show. We're financial advisors here at Jazz Wealth. We just like to do things a little bit differently. Talk about the stock market on a daily basis. We're not short-term traders, by the way. We just like showing you we're here, teach you something new, give you an update on where things stand. Things are changing quickly these days. So just like to be around, I don't know what other advisors do. I can't say. By the way, we've got a new advisor joining us here at Jazz Wealth. Mr. Eric will be joining us soon. And you want to talk about a guy that knows his planning. This is my man, right? I've been working with him and getting to know him over the last 2 years, trying to convince him to join us. He's finally decided to pull the trigger, so we'll be welcoming him soon. And boy, does he got a lot to offer, man. Got the brain. Got the brain. I like it. That's what it requires around here. Plus, he doesn't like golf. It turns out he's not very good at golf, so we're like, great, you got nothing else to do. Not the typical advisor. Welcome. So that's it. Last week's Wine and Wealth, big announcement here at Jazz Wealth. We talked about it in the class. If you want to check it out, go ahead and check it out there. And more to come on that as well. This week, we'll do some things a little bit differently and hang out. We always do it over there in the speakeasy. We'll have to get the camera set up maybe tomorrow. I'll show you what it looks like here at Jazz because we a little bit odd. This is all a TV studio, so happy to work with you there. Now, taking a look at the markets here today, you got a slight down day. Very slight. Almost felt boring in a way, didn't it? Just kind of felt like an odd day. If we were to take a look at the S&P, every new uptrend begins with the break of a downtrend, right? That's kind of a fun way to say it. So we broke through this downtrend. I've been drawing that line for you there just to show you the intermediate, what's going on there. Now, what technical traders will do is they'll use that as support. So prior resistance becomes now support, and they'll look for that for clues to see whether the market's going to continue to move lower and the downtrend's going to continue, or if we're going to keep moving forward. We can find a pullback area to buy. The S&P is actually now up over 5% since the invasion of Ukraine. So if you think like, oh, the Ukrainian war thing, that threw us off there. Not really. We were already down enough there. We're already up 5% past that there. Every index actually is positive so far for the year, or so far since the invasion of Ukraine there. So what does the stock market do in the coming months here, rest of the year, anything like that? Likely not much. You're likely going to have a wide range here where the market trades in between there because there's no reason for the markets to actually move higher. Everything's priced in now. We got our Fed rate hike. Yeah, we're going to talk about maybe a 50 basis point hike there coming up in May. You got inflation priced in. You got the war priced in. So what is there, right? Midterm elections, that's about all you have. And why has that ever been a good thing, right? That we're all going to be mad at each other again. Now, so the good news is really there's no reason to feel like you're going to miss out on the markets moving higher anytime soon there. The bad news is if we move lower with no real progress in terms of news, that's a really uneventful, a really bad thing to have happen there. One other thing I want to show you, this is kind of silly, but technical traders like to look at the 200-day moving average. In this case, it's purple on the chart. This is the 200-day moving average for the S&P 500. And I sort of alluded to this and talked in more detail in the notes from Jazz that we've previously done. But if you're looking here, anytime there's a steep and quick move in the 200-day moving average, in other words, prices accelerate pretty quickly, there tends to be a period of flattening out, which means the stock market tends to flatten out. You got to rally up, flattening out, rally up, flattening out. This would happen to be the steepest ever. What's happening? We're starting to flatten out. Price has no idea where it wants to go. It's looking for some kind of guidance there. So as far as the stock market is concerned, if you saw a little bit of back and forth over the coming months, it really wouldn't be all that big of a deal. So we'll see what happens there. All right, it is also triple witching week. Did you know that? That's where stocks, indices, and futures options all expire in the same week. They call it triple witching. There is such a thing as quadruple witching if you want to include futures index options. And the S&P performance during triple witching is actually kind of flat, right? So if you take every triple witching event since the year 2000, 20 years or so, you actually find that the average S&P performance is only negative 0.45%. So about a 0.5% loss during the week of triple witching, which this is the week of triple witching. So if you happen to look over here in the S&P, you go, that's a slow start to the week. Tomorrow does the same, and the next day, you kind of get the impression that maybe it's going to be a quiet week. All right, what else do we have here? Oh, the NASDAQ. There you go. The NASDAQ there. Big days, right? So you got a big move here with 4 days in a row of over 2% gains there. There has been 8 total of these days this year. But this year's been down. This is actually a really interesting thing because a lot of people see these big days like this and they go, oh no, I'm going to get left behind. That's not technically true. The bigger days tend to happen in downtrending, or I should say bear markets, which the NASDAQ is definitely in there. There's been 8 total days this year of 2% days, even though the NASDAQ was down over 10% at the time of that happening. The big days don't happen on the way up. You get one every now and then, right? But the big days happen when the market's falling. That's why they say, if you get out of the market while the market's falling, you miss some of those big days, your performance actually starts to suffer. I did a class on that in the past there. Now, last week we had 4 days in a row of over 1%. I think I said 2% a minute ago. Over 1% days. 4 days in a row. Take out Monday, you got Tuesday, Wednesday, Thursday, Friday, up over 1%, right off the 52-week lows there. In fact, right here, you gained over 10% just in those 4 days. So imagine you like panicked on the way down. Now what do? You're 10% behind, right? You would have recovered 10%. Now you're stuck there. Up 11% year to date. 1980 was actually the last time that we had something like this happen, right? How we doing over there? You're having a good time. Okay. So 1980 was the last time that this actually happened, where you had 4 days in a row of 1% gains. I mean, like consistently 1% gains day in after day out. 1 month later, the NASDAQ was up 5%. 3 months later, it was up 19%. And a year later, it was up 58% there. What I did is I said, well, that's 4 days. So I only got one data point there. What about any 3 days in a row where we had 1% or greater days there? Anytime in a bear market there, that's been a consistent sign of steady forward returns. Except for one time, right? If you just 1973, we happened to fall another 37%. But, you know, aside from that one, mostly steady times there. So is that a sign of what's to come? Well, put those two things that we just talked about together. We talked about the S&P 200-day flattening out, price flattening out. The NASDAQ with a big move here, going to try to figure out where it's going now. That's actually a good recipe for maybe seeing some steady gains throughout the rest of the year there. We'll see. But it's at least an optimistic view of a time that's really not that optimistic right now. If we look over at the Russell 2000, coming on up for you. Right back to resistance there. It had the second best 4-day move that it's ever had there, 7.49%. Back up to the resistance that everybody's kind of looking at the moment. Again, is this resistance or is this the break of a downtrend? See how they're both in there? It's tough to say. So why do we want to be the person that guesses that now is the time that we just take off and have this massive rally? I don't think you want to do that, personally. All right, looking around the markets here, you know what market factors are? Everybody ever explain market factors to you? So often we'll say large cap growth or small cap value, mid cap value, dividend stocks, the S&P equal weight. That's called a factor. That's a factor of the market. It means that we're taking not a subset of a sector, but we're taking the subset of a market based on maybe paying out dividends. Okay. There's my screen coming back there for whatever reason. I think we're still good. Still here with you. All right. I'll take it. And so let me go over here to the charts. If you look, I think everything just blipped out for whatever reason. Yeah, no worries. We'll catch back up there. Yeah, I can see on the replay there. It turned green for a second, but whatever. So anyways, if you look at the DVY, this is a way to look at one of the market factors, right? So this would be the dividend. It's an ETF. It's a dividend-focused ETF. You're focused on dividend-paying stocks. You know, this is the best performing area of the market right now. The dividend-paying stocks, the best factor of the market. Not large cap growth, not the small cap values, not small cap growth, not your RSW or RSP, the equal weight S&P 500. It's dividend stocks. Everybody's like, I don't know what's going on over here. I'm not sure about Russia, Ukraine, inflation, rates, and all that. I'm going to go with the dividend stocks. And that's where the best performing factor of the market is. You could actually look at RSP. There you go. So the RSP is actually the equal weight S&P. And a lot of people like to use that as a factor as well. If you look at the S&P 500, right, we know that it's weighted, so not every stock has an equal say. Well, in the RSP, every stock has an equal say. And that's exactly how that works. It's just straight across the board there. That's actually not doing too bad either relative to the market. It tends to be less volatile on the way down, which it has been in this case. All right, let's take a look around and see. Office trades, right? We'll go over to the office trades here today. Fairly active to start the day. You can join us, jazzwealth.com/research. If you want to join us there, it's $13 a month. We're just doing a thing where we sit down for lunch and share you all of our trades and stuff and how things are going. We balanced out our S&P position there to get neutral on both sides. I did get that order filled at 425, which we were sitting around waiting for. Finally got filled. Dollar General sold some calls on that one. Colgate sold some puts on that one. We did a very interesting trade. In fact, the name of today's class is a sneaky way to buy a stock cheaper than what it really is advertised for. So we did that on Starbucks to illustrate our example, and Micron actually filled throughout the day. Closed out that position. I believe it was 42% of the total premium collected. So that was a short position. Micron had a little bit of a dip right in the middle of the day, and that helped us out. See this guy right here? So that was very helpful because we had sold the 92.50 calls. Also today in the office trades, the concept was how do we include more people? So I gave you a trade example. We went through it. I actually physically did it. You got to see how that happened. And so we went through what if you had different beliefs than what I did? What if you had less money than this account did? What if you had the ability to buy shares and you wanted to? So we're kind of showing the different variations there. All right, new highs and lows for the day. Let's take a look while everything sort of catches back up. We go over here. There were 38 new highs. There were no new lows. It was largely energy and financials, but they weren't the big financials. It was like the smaller insurers, the smaller banks and stuff that had the rally today. Point out a few things for you. Valero hit new 52-week highs. Just a kind of an interesting breakout there for a stock that didn't really participate with the price of oil falling back. You know how I like to look for things like that. Travelers would be the same. We pointed out this breakout last week. It continues here this week. Now starting to get a little extended. So you'd want to be, if you're a short-term trader, maybe taking a look at some profit taking, maybe something like that. Progressive was moved higher as well because Warren Buffett actually bought a position in Allegheny. I'll cover that in a second, which is an insurer, and so Progressive got a little boost on that one. Eli Lilly now starting to get extended and seeing the trouble here, so take a look. You've got, as it tries to move up now, you could see those tails. You have people saying, that's it, I'm going to take my profit there. This has been a great move. I'm happy. Yay. So you're seeing that selling pressure, the balance between the bears and the bulls starting to shift towards the bears a little bit. And largely, I would say it's just the profit takers in there. Centerpoint as well. Just thought that was kind of interesting. Broke out to new highs. Very shallowly kind of pulled back. Gave you very little attempt at pulling back. And it's already moving to new highs. So that was kind of impressive there. If we go over to stocks in the news, unfortunately, we have some bad news. Boeing, the plane crashed there. A China Eastern plane crashed. 132 people. And if you read through, I kind of looked to see, I'm interested in aviation. They were essentially at cruise altitude, and then they weren't. Like, that was not an impressive, there was something like disastrous that happened because they were just flying along, no problem, and then essentially went vertical down the wrong way. So that one was pretty nasty there. There's obviously a lot of investigation to go on there, but Boeing took a hit this morning. It was down over about 6% at one point. That was one of the worst performances of Boeing from a non-structural issue or mechanical issue that was probably Boeing's fault in recent history. So that was a pretty big hit for Boeing to take, considering the news that's available at the moment. Coinbase, you got Jim Chanos. He's a famous short trader. He likes to do the short side of things, and he says, I'm short in Coinbase. I don't understand it. I just don't see why they're worth that much there. He publicly is short now. Disney was in the news as well. Shanghai Disney had to close, which is not a big deal for the stock because Disney doesn't own 100% of Shanghai Disney. It's a lot owned by the government as well, so they don't take the full brunt of the dollars lost, or the revenue lost in that case, but still in the news. You got Allegheny being bought out by Berkshire Hathaway, 800, I don't know, it was a lot of $1 billion, but 800 and some dollars a share, 868 maybe, I don't know, almost $12 billion, a lot of $1 billion. But this is what Warren Buffett does. He loves the insurance side of things, right? Think of Geico, think of back in his day, all those plays that he loved. And he obviously saw great value in these guys because he paid a pretty penny for them. But he's, got the money. I didn't see if it was a cash deal, by the way, because, he's got enough of that cash. He's just buying out the shares. So I think he's just using the cash now, I guess so. Speaking of cash, Guess, yeah, they're still around. Guess is doing $175 million share buyback. That's a big number because that's about 10% of what they're worth. So they're buying back about 10% of their company there. The stock was higher by 1.5% on the day. I'll take your questions if you have any, but tomorrow we've got Fed members speaking, a lot of them, I think, 3 or 4. Williams, Daly, Mester. Okay, 3 of them. It's Investor Day for NVIDIA, so if you see a little bit more volatility there, you know what to expect. BlackBerry was upgraded today. Barron says that Wendy's is discounted here. I didn't look at it. That's kind of interesting there. Nike had some negative things to say about rising costs. And tomorrow you've got Adobe reporting earnings. That is correct. They beat on earnings 89% of the time, 83% of the time on revenue. And that's what's exciting going on there tomorrow. I'll take your questions if I can, see what I can answer for you, and be on my way. You sold some MU calls as well. Good. Good. Yeah. That was a quick one, right? We just did that one the other day, and that was a quick move. Mr. Bishop, 20,000. Yeah, right? That was, in a bad way, that was fascinating, to see that. I don't mean to make it sound like that was fun, but yeah, you never like to see that. But how does that happen? Just out of nowhere. Can you short Allegheny? You could. Would you? I wouldn't. Yeah. Can we agree everyone is expecting a pullback? I think people would still hope that there's more juice left in this pullback. I don't know that this is the week for it, unless there's some bad news or something. There's just nothing. There's just nothing going on there. What do we do? When do we get moving again? Right? What? Sorry about that. Speak sweet Roku to us. Yeah, it's trying. So Roku at 120, yeah, right around $120 there, has not broken the downtrend yet. So it gets a little bit of a weaker sort of rating than anything else that's at least tried to break the downtrend. Think of all those weak stocks, Etsy and PayPal and Facebook, all that stuff. They at least attempted to rally. This would be kind of a smaller rally there, which I think opens the door again to more of what I was talking about earlier this year of a buyout, right? And I don't know that this is going to be a stock that just rallies back and you're like, $350, that's great. I think it's a buyout. Now, could be wrong, but I think it's a buyout. You think the Fed's going to mess it up again? Are they messing up, or do they mean to do that? Didn't Powell just say the other day, basically, he doesn't care about the market, whatever it takes to bring inflation under control? So are they messing it up, or are they doing exactly what they want to do? Yeah. Would you say dividends and value are basically the same factor in regard to factor investing? No, not at all. It might coincide at times, but not as a whole. Lucas broke the downtrend. Yeah, well, it's trying. I wouldn't say Roku's broke yet there. It hasn't, if you were to draw a perfect straight line, it hasn't broken yet. Yep. Giovanni looking all over the place there. VLTA, what's the question? Will it long term, you think from the election it goes up? I don't see why. Yeah, I don't see why. I don't have much good to say about that one there. If you had to, you have so many dollars, right? We don't have unlimited portfolios. So if you have so many dollars, is that the one you want to pick on? Right? I get it. If you had tons of money and whatever, is that it? Granted, they've got earnings coming up. Anything's possible, but is that the one? I don't think that's the one. That's essentially a gamble there. Yep. I've seen a lot of analysts talking about bond curves flattening, inverting. What's the risk of it happening? It's coming back up more as we have pretty violent moves in the bond markets between short and long term. That's all they're referring to is the sort of, if you connected the dots between your long term or short term bonds, your notes basically all the way to 2, 5 year, 10 year, and so on. That's that curve that they're talking about. It's like a connect the dots kind of a thing. I could show it. We'll talk about it. It's been a while, right? Last time we saw a real sharp steepening of the curve, I showed it there, so we can do that again. Yeah. Buy insurance on an insurance company. I appreciate it there. Richard says, Snap. I'm not sure what the question is there. Snapchat. Hey, actually, Snapchat's another one that hasn't broken the downtrend there. All right, there you go. So Roku's not alone. I don't really have anything to offer to that one there, but it's still weak. Now the question is, all that energy in the NASDAQ broke the downtrend. Everything went, but this one didn't. What are we hoping for? So just a regular or just kind of an outlier move here or something? That's tough. Tough to make that bet. I know it's attractive, but tough to make that one. Anyways, well, that's all I got for you. I will wrap it up there. Apologize for any issues here today. We'll be back tomorrow to do it all over again. And that's it. Enjoy the rest of your day. We'll see you tomorrow.